Good morning. This is Vance Williams out of Seattle, Washington. For those of you who don't know me, I'm doing this. It's my 12th year. Anyway, the latest news is that the U.S. housing market has lost momentum. I think this is what's driving the U.S. dollar selling today. But keep in mind that this is all happening in a larger context. The U.S. dollar cannot just grow stronger and stronger in relationship to other economies. This works against the U.S. economy due to the greater need for stability in a world market that's really interdependent. So in other words, if the dollar just goes up and up and up, eventually there's a backlash of consequences in, with respect to what that means internationally. So if the U.S. dollar makes gains, those in power will shift the focus at some point to negatives for the U.S. To stabilize currency movement. They can't really do anything in terms of policy at the Fed anymore. Their toolbox is empty. We still have a risk event this morning for the pound dollar with the Bank of England. Carney's going to be speaking at 10:35 a.m. this morning. I would anticipate his comments to be relatively positive or neutral, towing the line for the current movement. Oil and gold are holding steady. Okay, so let's take a look at the euro. I mean, as you can see, this was that long line on the daily. As you can see, it held right there. So that was meaningful, came up. But with respect to this morning, you can see this on the 30-minute. I've got this key level drawn showing where the buyers and sellers are basically at 50-50. So again, what we look for is a buyer-seller advantage, strength of the advantage, and then how do we manage the risk? And that deals with, where's our stop relatively safe, where's our target relatively safe, and what's the optimal entry with good risk-to-reward ratio. So what I would be looking for is a 5-minute close above this level. That would show me that there was a change. So if we drop down to the 5-minute, you can see that happens here. A lot of sellers right here, so it does dip back in, but pretty much either on the first close and a pullback or the second close, it's a pretty safe bet. The price is not going to dip back in here before it makes a move of 10 plus. And so that's what it did. Now we'll see something similar on the pound dollar, and I actually prefer this one. As you can see, it closes up here, but let's go back to or zoom in, I should say, to the 5-minute, and you can see what happens at this level. This closes, and this is the classic trade you'll see me take. I wasn't here this morning to do it, but this is definitely where I would have entered right here, just at any sort of pullback at all. Right on the close is pretty good. And what that's showing me is that something has changed, that the buyers have an advantage. I typically won't do this on 1 minute of buying and selling, but 5 minutes of buying and selling usually will show us an advantage. And so here you see the advantage on the part of the buyers. This was the trade here. I probably would have gotten in right here, gone for 10. I would have been out very, very quickly within probably a couple of minutes with a stop about 10 below right in here. So that's about it. So let me just go into a little bit more explanation here. This is very advanced in the sense that you have to learn how to crawl and walk and run and all that stuff, and then once you do, things become very simple. You can do a lot of things without thinking about it. So I'm able, after 12 years of doing this, or 11 solid, I'm able to see a lot of things without thinking much about it. So you'll always see me, where's the advantage? What's the strength of that advantage? And then how do I manage the risk, which has to do with, what's an optimal target? What's an optimal stop? Can I get in to make those two work? So pretty simple, actually. Let me go over to, what am I gonna do here? Looking for, showcase. I want to add a link in here. Adding a link into the showcase just to my main site, forexartofwar.com. Where is it? There it is. So that should show up on the right. And then let me tell you why I'm giving you that. I'm going to bring up the actual website and then put that on the screen so you can see it. Oh, I need to share that screen. Oh, I think I am. Yeah, it's been a while since I've done broadcasts. So I'm a little bit rusty on this. It's been about a year since I've done live broadcasts. I've been keeping it mostly to our little group and private sessions. I'm not sure exactly what I'm going to do yet. I've really enjoyed working with the traders, even though I retired a year ago. I'm not sure if I'm going to open this up for more students or not. But anyway, before I retired, I wrote this book, Forex Legacy. I wrote many books, but this one was specifically designed to capture my 11 years of work. And I guess it is 12 years now. But anyway, this was not just the Forex trading skill itself, but all of the information from my 11 years of working with other traders, how you learn to do this. And so this book, it contains everything. And if you click on it, you'll notice you don't need to put in an email or anything. I'm not list building. You just go right to the book and, you know, read at your own peril. I mean, it is the real deal. I mean, you're going to get, this is all meat and potatoes. No fluff, no junk, nothing else to buy, nothing else for sale. In fact, this isn't even for sale. So, you want to know how this works. This is how it works. So just wanted to share that with you. Let me see what else. Well, that's about it. That's about it for today. I mean, if you're a serious trader and you're watching, I guess we could look at right now and evaluate what's happening now. One of the things that I look at, see this advantage breaks and we get a move. How much so far? About 30, not too bad. And so this is the next move. This is called a new wave here is what I call it. But it's a move of 17. And then this next one moves all the way up to 22 before you see any sort of pullback. And it's this type of situation where you can pull a fib here and look for a pullback to maybe 38.2, which we just got. Get some buyers there. If the market stalls just a little bit, this could pull back a little bit more. We'll see. Let's go to the pound. The pound's looking a little bit different. It originally makes a really good move of 40, goes sideways, makes a move of 29, goes sideways, makes a new move of 20, goes a little bit sideways, and then chops its way up to here. So what I see here is just kind of a little bit of fatigue on the part of the buyers going up. And part of the reason for that is probably because we're getting a little bit closer. We're about an hour away from Governor Carney out of the Bank of England talking. So I imagine, they might push this back a little bit farther, a little bit concerned about what he might have to say, or at least it just won't move with any conviction up. So I would prefer the euro at this point. Again, I don't trade a 5-minute chart. What I'm doing with the 5-minute chart is zooming in so I can see more of the behavior. Like, for example, if I'm on a 30-minute chart, all I see is this going up and up. I can't see what they did coming up, down, up, down. I can't see any of that. I have to zoom in to see what the buyers and sellers are doing. So I see no pullback at all until right now. And they've almost got back to 50%. Now, one of the things we can look at is if this pulls down to 50%, where can we get a good profit? It's actually kind of tough. Now, I want you to notice something, that the buyers and sellers resolved at this level right here over a period of 5 minutes. So what that means is there's 50-50 interest right here. And so if you're going to enter a trade, you've got to put your stop in a relatively safe spot, which would be just below here. And you have to get a target just right at or just below there. So that means we need so let's take a look at how that might work. Let's say we had our stop here. That's pretty safe. We'll put that in red. And let's say we put our target right here. And let's make that one blue. One of the first things we need to do is just ask ourselves, is there enough room to get a reasonable profit? So if we go down here, we look at 6, 7, we really need a minimum of 8. Now, the reason for that is on most dealers' platforms, if you're trading with a risk, a total risk to equity of 2.5%, what you're going to find out is somewhere around a stop of about 8 pips, you run out of usable margin. So this just, you know, a lot of people don't figure this out until they trade for a long time. So if we're going to go for 8, I'm going to just show you how this works. We're going to go for 8. That's going to put us at an entry at about 130, about, let's call it 50% and go for 7.8. So 1363, let's say. So let's put a buy entry order. Oops, can't get it for some reason. Okay, create entry order. 113.63 buy 113. I don't know if it'll let us get it. We're pretty close to price. Let's see if it'll let us do that. All right, so we've got an entry order. If it touches off of 113.63, it's going to put us in, and that's going to put us at real close to an 8 pip profit. It's probably about 1/10 of a pip shy, and then we've got about the same in terms of a stop. We'll drop that down just a tad. So we'll see. Now, if price pushes up to this blue line before picking up our order, you want to pull this order out because the behavior that you're trading has already played out. It came back, touched off right near the entry. Anything within 2 pips is considered reaching, and then pushed up here. Now, it hasn't done that yet, but if it does, as you can see, the buyers push that up to 38.2. We'll see what they've got left in them here. Let's go ahead and put in a target of 113.70. We got that, and let's just put in the stop of 113.55. And then we're good to go. Oh, 113. I'm not sure what I did wrong there. It doesn't like that. Add stop order, 113.55. Okay. Yeah, I'm not sure. I'll keep an eye on it, but let's see if we can get into this trade. It looks like it's going to pick us up here. Almost. There it goes. Okay, so we're in that trade. And we do really need to put that stop in, and we wanted it at 113.55. Not sure why it won't let me in. The other thing is when you're dealing with entries that are very close, you know, to targets like 8 pips, sometimes depending on the market conditions, you know, the spread is such that it won't allow you to get that profit. So that's a factor. When I traded for years, I was dealing with 0.5 spreads with the broker I was using. All right, so let's try the stop, 113.61. It says try 55. I wonder if I was popping that in the limit area. I think I was. Anyway, so this gives us a potential setup. Now, take a look at everything I did. My risk is below 76.4 and below this level of 50 level that it broke out before. My target is very, very close to the former 5-minute reconciliation level, and the entry is pretty good. So all in all, this is a pretty decent trade. Now, it's not the trade that I would take, but this is the type of trade you will see in my book that will allow you to practice and learn all of the skills that you need in order to you know, to develop the skill. My trade obviously would be something along the lines of right here. This is way safer, showing a significant change over a longer period of time, and this is much less risky right here. Here, we're getting a little bit later in the day. London is going to close in about an hour. Carney is going to be speaking in about 45 minutes. So there's a lot of reasons why this could stall and pull back farther, but it shows you the structure and the layout of what you need to do. Sorry for the dead air, but you know, I don't have a lot to say. With my live sessions with our community of traders, I'm able to just pause the recording and say, "Hey guys, I'm going to go get a drink of water or something." But here, they just, you know, the broadcast just keeps rolling. So I guess what I'll do is I'll go ahead and call this a call. I'll be back tomorrow at 9:30 a.m. Eastern. So same time, and you know, we'll see if we can do the same thing. Give you a good read on the fundamentals, what the story is in the market. Give you a good read on price, and point you to the skills that you need in order to execute those types of things. All right, you guys. Thank you. Have a great one.